Good afternoon, and thank you for joining us today on the McGraw Council. Today, we are honored to have Steve Beaman back with us today, speaking to us in regard to what is happening in the finance world. As we've seen in 2020, there's a lot going on. Well, please enlighten us. What is the latest?
Well, first, John, let me just tell everyone watching us today that the reason I have the credibility to speak on this is that I've spent the last 30 years of my life in institutional economics and finance. I've been on the econometric side working with the Fortune 100 on forecasting models. I had the good fortune of joining two very brilliant partners in forming Chicago Investment Analytics, which was an early pioneer in providing quantitative and alpha models to the institutional market. So I come with a lot of background. Let me just kind of go into this. Obviously, the pandemic has both sent a shockwave as well as an accelerating curve into the world of finance. You've already had a movement toward computerization of the world of finance. All this is doing is accelerating that curve. And when I talk about that, it's everything from how trading and execution is done into where people work. We've seen the mass exodus of people out of the main city buildings into the work at home environment. That's not a new trend necessarily, but it has greatly accelerated. That then trickles down to this question of what will be the resolution, if you will, to the commercial real estate market. And I think you're going to see some major dislocation there.
I think that's a really big one.
Yeah. We've also seen, obviously, a hit to the entertainment and consumer, let's call it the service world, whether it's a restaurant or a venue, an AMC movie theater. The Regal Cinemas just closed down. We hope they'll come back, sometime soon. But the world of entertainment has remarkably changed. And I think that is new. That wasn't really a trend that was in place. It's more of a shock to the system. So we've seen those kinds of things. Now, if you look in the world of today's coming out of this, as we sit here on October of 2020, the manufacturing sector, providing the consumer goods and the business to business goods, is actually rebounding quite nicely. Where we're seeing this laggard is in the consumer services area, bricks and mortar retailers, restaurants, entertainment venues. Those types of things are really struggling. If you look in the major cities at the arenas, for example, that were built to house concerts and basketball, they're really struggling through this. And that goes into things like churches. And while people don't look at the church as a business enterprise, the churches do provide both employment and taxes and everything else. In the real estate side, that's a major hit on localities. So we're seeing this trickle down from the entertainment and other collective venues into the overall economy.
So when you're talking at that level of macroeconomic impact that has far-reaching ramifications, what would small business owners really need to be keeping their eyes on at this point in time? I mean, you touched on a little bit, commercial real estate's obviously been hugely impacted. We've obviously seen major shifts in consumer behavior. That's another, interesting virtualization, digitalization topic. But in the world of finance, what would a small business owner really need to be keeping a sharp eye on with everything going on?
We look to the small business community on everything. Business is pretty simple, right? You either raise revenues or you cut costs. Clearly, in the cost cutting world for the small business, we would encourage all of our members and those people dealing in that world to consider using virtual reality as their fundamental office space. I mean, you experience this, John, with your leadership of the council membership. You don't have an outside office. You work from home, which raises the efficiency of your work, which is a cost reduction to that business. The second thing is obviously to start looking more clearly at what we call a pro forma, which is a forward-looking statement of operations. A lot of small businesses don't spend the time doing this, and they really need to, because you've got to be able to plan your cash flows accordingly and do then scenario forecasting at even the very small level to say, what happens if this hits my income? How can I cut expenses through that period? So we're looking for our small companies to get more close with their CPAs. They should clearly reach out to you at the council and start developing these pro forma statements to look forward.
What about the cost of capital? Are we still looking at ultra low costs in that regard for the foreseeable future?
And there's no question about that with respect to real estate lending. I think if a small business person can hold real estate collateral or an SBA loan against that collateral, they're looking at very small cost. Then you're going to get a decoupling when it comes to working capital, when it comes to inventory financing, certainly purchase order and receivables financing. That's a little bit different story. What you're seeing is the banks, if we, coming through 2008 and 2009, we had the Dodd-Frank legislation, which really did restrict banks' ability to lend to the small. Well, we're going to see an acceleration of that. So it's going to be more and more difficult for the small companies to get what is thought of as traditional funding. So I would urge them to start looking in the world of alternative finance. There are lots of companies that provide this, but shop around, make sure the rates and the terms are amenable to your business. But I think the world of alternative finance is something that small businesses should become aware of.
So that was actually already answered my next question was at this point in time, do you have to really start looking at non-bank financing? Because even here in the DFW Metroplex, we've seen a lot of banks really want to help, and sometimes they are able to. However, if you're looking at like a restaurant whose capacity is cut by 50%, that's not a good lending operation for a bank. I think we all know that. That's when you have to get creative. So then to your answer to that would be, that's when you really have to start exploring these non-banking options, which is, that alternative finance, fintech realm.
And I would even, John, go to the other side of that equation. You're a restaurant that's done really well because of your carryout business, and you need to expand capacity. The banks aren't going to be able to do that for you. It's not the bank's fault. They've been vastly restricted, Sarbanes-Oxley, and then certainly Dodd-Frank. They're not able to do this. So again, the world of alternative finance is becoming larger and more well-known and mainstreamed. And I think if small businesses can become familiar with that, it will serve them well in the next 5 years.
Can you use alternative financing as a regular, lifeblood, so to speak?
You can certainly, there are companies within the world of alternative finance that will establish not just factoring for your invoices or your purchase orders, not just cash advances based on future revenues, but they'll do lines of credit just like a bank does. I think people are going to find their rates are higher, but that's because in reality, one of the reasons the banks don't want to do this business is they can't charge a risk-adjusted rate. The alternative finance will provide the service to you. It is going to be at a price that reflects the risk they're taking.
But again, I think when you look at, push comes to shove, you either can get the cash or you can't. And so, you might have to, raise pricing or something like that. But if you get put in between a rock and a hard place, at least you have the opportunity to get the cash.
John, I want to catch on something you just said, because I think it is just overwhelmingly important for the world of the small. So many entrepreneurs and early stage businesses get in a position where they need cash. So they go out to the alternative world and they're looking for anyone who will provide them cash. That can create enormous problems down the road. It's why one of our sister companies is a funding company, as you know. We urge customers to go ahead and create that pro forma look ahead so that they ensure themselves that they can afford to repay that money. Oftentimes, these companies get into a snowball effect where they borrow money, but the cost is so high, they have to borrow more money to pay back the money they borrowed, and it's a never-ending death knell. The people in small, and especially as you get into lines of credit and these merchant cash advances, they're valid things, but make sure that you look ahead in your finances to make certain you have the operating margin and the future cash flows to repay that money and keep yourself out of trouble.
The way I always like to look at that was the typical, entertainment example of cash. You can take a dollar bill and inject it with steroids. You can really do a lot of fascinating and interesting things with that cash. But to your point, look ahead and plan for it. Because there's this company I talked to in California about 6 months ago, a little after COVID first got going. And they had stacked 3 or 4 different merchant cash advances. And it was so bad to the point no one would even fund them because it was so expensive.
Well, and the reason that happened is simply that they didn't have the consultative relationship at the first one to say, often when our cash company, our funding company has gone to customers, they might ask for $50,000. We go back to them and say, you know what, you really need 70 because this is going to happen and you need to work it this way. And then instead of maybe them optimistically saying, and we can do it on a 90-day deal, we may extend the terms a little bit. In other words, the point is don't just take the money because you're desperate and okay, good, I got the money to band-aid myself. Come up with a real solution for the long-term sustainability of your business.
Amen to that. Amen to that. I think that's one of the beauty about small business owners is that we're very, very good at putting out fires and we're very good at finding solutions. But the first solution that crosses your path is not always the best one.
And John, I can tell you, I've pulled more rabbits out of a hat than most people would ever think to. But that's not what you want to be doing in your business. You don't want to be fighting fires every day. You want to have the systems in place that you can actually think about the next 3, 6, 12 months instead of constantly reacting to that day's trouble. So again, I think as you bring up such a valid point, we want to have folks aware of alternative finance. We want to make them aware of how it works. Again, the cost is going to be more, but that's not necessarily bad. As you said, sometimes you just need the money. But make certain when you get the money, you've done enough forward planning that you can repay that money and have room to spare for future growth.
So when I know we only have a few minutes left here because we try to keep these brief and to the point. If we could come up with like an example, maybe a few different industries. A restaurant would look for what type of alternative financing? I mean, obviously, if it's manufacturing and you own land, you have a lot more options, so to speak. What about go ahead.
Yeah, well, let me touch on some things there. I think you bring up an interesting thing. For the restaurants, what we like to see as we fund in the alternative space, we like to see capacity expansion, whether it's new tables, new ovens, more space. We like to see a restaurant in a position where they're increasing capacity, and that's the use of the funds. We don't like to see situations where they're band-aiding a problem that's systemic to the business. If you go into the manufacturing world, to your point, what we're finding more and more is that manufacturing companies don't own their real estate either. They're leasing it from other companies. So they're going to need help with their purchase orders and their cash flows on their receivables. So that becomes a little different thing. Instead of, for example, in the restaurant business, you might do a merchant cash advance. For the manufacturing company, you might do purchase order and receivables financing. You might do a line of credit. We have other circumstances where we did, for example, we funded an auction house that had a 3-month cycle. They're broke, they make money. They're broke, they make money. What they needed was kind of a very short-term balloon payment on the funds they needed. So each circumstance is different. And I think that's important for the viewers to understand. Your small business needs a customized solution. So as you go out to the alternative world, make certain you find somebody who's consultative in their approach and isn't just out there to quantitatively over the internet throw you money and say you deal with the ramifications of it.
Because if I understand that world correctly, that's not exactly an automatic renewal thing. That's something you're kind of putting your hands, you're tying your hands up a little bit of the golden handcuff scenario.
You absolutely can. And what we find too often is that the internet is a great tool for delivery of all kinds of things. It has morphed into delivery of the fintech or alternative products. And a lot of small businesses just go on and they Google, I need money for my business. You'll get 25 guys who show up, and some of those may or may not be the kind of people you want to work with.
Anyone can buy an ad on the internet or social media or whatever. And that's, again, that's the beauty of a free market economy. It's free market. Absolutely. It's also buyer beware.
And it should be. These business people should be smarter than that. I know of a guy here in Illinois who went online and did that, and he walked out with cash, not realizing that it was a 100% annual interest rate. Now, thankfully, the council was able, as one of our members, to help him out of that. But I think it happens all too often that people get into things they don't understand. And the small business person who's wearing so many hats, running so many directions so fast, oftentimes can get themselves in more trouble than they think. So we would urge them to find someone who's not just an online quantitative player that runs your credit score. And bear in mind, when they run your credit score, it hurts your credit. But we don't just want them to run a credit score and then send you a check. That's not consultative. That's not sustainable business. We want you to find a player who will actually work with you. And there are a number of those. And as members of the council, I think you have several you can recommend to them.
Absolutely. And that you've already answered that question I was going to ask too about what you need to be doing as a business. Be forward thinking, be a visionary, so to speak. Because I know your time is precious here. I do have one more question just for that small business practical application, so to speak. What would be one horror story you've seen in that world, and what would be one wild success story?
Thankfully, I've seen 10 success stories to every one horror story.
Beautiful.
But I think the horror stories come up when people really are so desperate for cash, they may falsify contracts or falsify purchase
Oh
orders.
man.
So they're making themselves look better to get a band aid. And we've seen that. And that is a nightmare waiting to happen to them because in the world of business lending, if you commit fraud, a bankruptcy doesn't get you out of it. That lender can come at you for the rest of your life. But on the success side, and we've seen tons of this, I can tell you stories about minority startups who have come to us when nobody else would, and we've been able to fund them to start their own businesses. We had a young lady down in New Orleans with a naval contract, but she needed money to put up to get the contract executed. We were able to do that. We had a service company here in Illinois that needed, I don't know, $600,000 to go make an acquisition. Very successful for that company, made them a lot of money. Another construction company we work with where the bank had cut their credit lines and threatened the existence of the business as a 10-year-old, $10 million industrial construction company. We were able to step up with a line of credit. Yes, it's a little more expensive than they were paying, but they don't care. They come back to us time and time again because they know we are partners with them in their business.
And whenever you're talking something at this level, that type of money involved, having a true relationship with that finance company, it's a major league asset, not to be taken lightly.
No, there's, in the old days, you had a relationship with a banker, a lawyer, an accountant, that type of thing, insurance agent. We would recommend businesses think about that as almost a board of counselors to look at their business, make sure they've crossed all the T's and dotted the I's in the legal framework, make sure their books are established well in the accounting side and that they're getting timely and materially important reports. And on the banking/finance side, find the partner you can work with that understands your business and is willing to put up the capital in the right structure for you.
Exactly, because every business is different. There are some commonalities, but when you start getting into the details, every business is its own unique animal. Steve, I want to
Sure.
thank you so much for joining us. Really appreciate you taking time out of your day to talk a little bit about fintech and alternative finance. Y'all, thanks for watching. Thanks for joining us. Please definitely like our page, drop a comment in the comment section. If you've had experience with alternative financing or you haven't even heard of it, let us know what you're thinking. If you found this helpful, how you might be able to use it for your business as we're continuing to help foster and encourage and advocate for that small business community. And as always, remember, we're bullish on the American dream and we're bullish on your future. Y'all take care.